Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This is all my own original work, as I think you deserve to have that. So with that, euro dollar. Another indecisive pattern yesterday to go with the previous two consecutive indecisive doji crosses from last week. This time an indecisive spinning top with a long tongue on it, reaching up and being capped once more by the combined green short medium moving average, which is currently at 116.24, and the mauve medium moving average, currently 116.43. Further above we have the October 21 high at 116.92, and then not much until we reach the June 2025 high at 118.29, which is the gateway to resistance that stretches up to 118.65. Looking below, we have the key bright red lower bull channel line, currently at 115.20 of the shallow July to date bull channel, followed by support from the January and February 22 highs at 114.82 and 114.95 respectively. Nearby and just below, we also have the 2019 high at 115.70 and a November 2020 low at 116.02. The action since late October is now seemingly resolved into a potential double bottom, or if we look from early October, into a potential reverse head and shoulders pattern. Now it's too early on both to be sure, but they are exhibiting the signs for such patterns. There continues to be one other feature which I need to bring to your attention, something that I've said now repeatedly since about March this year. We are set up for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between would have a lesser outside year pattern. As we enter December, it is time to look carefully at this potential very long-term pattern, and right now it looks like we are set up to achieve an annual key reversal up. So far today, a small move down to the November 2020 low, but no more than that at this time. Cable, aka sterling against the US dollar. Another indecisive pattern yesterday to go with the previous two consecutive indecisive doji crosses from last week. This time an indecisive spinning top, though I do note how it also became a wannabe inverted hammer, though the qualification for such a pattern here do not fit. It nevertheless has a long tongue on it, reaching up and being capped once more by the various resistances, made up from the 61.8% Fibonacci line of the June 16 to September 22 move at 132.46, and the August 24 high at 132.65. However, the real cap stretches from 132.83 up to 133.23, and possibly as far as the medium moving average, which is currently 133.67. This is made up from a pair of head and shoulders neckline extensions, currently at 132.83 and 133.23, and that's of the May to July head and shoulders top pattern and the August to October head and shoulders top pattern, respectively. This last head and shoulder top pattern is very interesting, as it gave a primary target below in the 131.10 zone, which was reached 5 weeks ago, and a secondary hard to reach target X1 down in the 128.97 zone, which I am now having doubts about still listing, as it looks like the primary target may have been enough. Thus, looking below, we have some lightweight congestion between 131.10 to 131.44, possibly as far, well, including the round about the 131.18 area, is made up from the December 2020 low at 131.33, the July high at 131.44, and the lesser Fibonacci line at 131.18. However, better support is below from the dark blue, very shallow lower bear channel line, which is currently 130.42 of the July to date bear channel. And looking further down, apart from the 50% Fibonacci line of the October 23 to July 24 move at 129.11, and the congestion in March between 128.52 to 130 even, which isn't that great, well, we really don't have much below if the market chooses to break the dark blue lower bear channel line. The issue though is the market's taking its own sweet time in moving lower, and I'm wondering how strong that dark blue lower bear channel line really is. Is it tougher than the pair of head and shoulders tops that's above? Additionally, we do seem to be building a late October to date possible double bottom, and we seem very close to triggering it. If this happens, then we have a primary target X2 in the 133.33 area, with a secondary harder to reach target X3 up in the 133.96 area. If we fail to trigger it, then there is still the possibility that the early November to date action could be a possible nascent bull channel pattern. Finally, much like Eurodollar, there continues to be one other feature here which I need to bring to your attention. It's something I've said repeatedly since about March this year. We are set up for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'd be on. Anything in between, and we would have a lesser outside year pattern. Now, as we enter December, it is time to look carefully at this potential very long-term pattern. And right now, it looks like we are set up to achieve an annual key reversal up. So far today, a slightly higher open, but looking again like another indecisive pattern, though it is sort of starting to edge a little bit lower at the moment. US dollar against the Japanese yen. A third bearish black crow pattern yesterday after the previous session's somewhat unassuming lower indecisive spinning top pattern. The market continues to show doubts about reaching up to target X at 157.90. Now this is the primary target from the move up and out of the October to mid-November bright red ascending wedge pattern. A further harder to reach secondary target X1 is up at 159.65. Recent action had seen prices push up and out of the two patterns, though as yet we've not fully stabilized outside of them. Now the first pattern is the dark blue July 24 to January 25 bearish shift pitchfork. The dark blue upper time is below, currently at 153.62. And the second nearer pattern, and these are both long-term patterns, is the bright red April to November bull channel. The bright red upper bull channel line is below, currently at 155.51, but only just, having been tested earlier today. The market pierced this upper bright red upper bull channel line yesterday and ended up closing right on it. So far today, a move up from the open, back up from over the bright red breached upper bull channel line, as well as over the June 1990 high at 155.78. US dollar against the CNH, the offshore Chinese yuan. Another indecisive pattern yesterday, this time an indecisive doji cross after the previous session's indecisive spinning top. That was also a bearish dark cloud cover pattern and a bearish double. The base of the action was once again on the combined congestion between 706.32 to 706.57, made up from the 50% Fibonacci line of October 22 to April 25 move and the June 23 low respectively, though the attempt high yesterday was not as high as the previous session. Top side we have the dark blue August to date downtrend, currently at 710.86. And the lower trend line extension, currently 710.92 of the mid-January to late April descending triangle. Now so far today, an attempt higher and now lower, but once again hampered by that June 23 low and the 50% Fibonacci line below. Now below these we have little apart from a lesser Fibonacci line at 699.96. The real support starts between 697.69 to 696.90. US dollar against the Brazilian real. A third countering bullish engulfing pattern yesterday and almost a key reversal up, though not quite. This after the previous session's counter-to-counter bearish opening black Mariposa and bearish Harami. And the top side was again capped by the green short medium moving average, which is currently 535.81. Though the market did pierce it yesterday, but ended up closing right on it. There is further resistance topside up at the July 24 low at 536.76 and the August 24 low at 537.59. Both of these have the dark blue middle time currently at 537.72, pushing down through them, and that's of the mid-December 24 to mid-April 25 bearish shift pitchfork. Now this bearish shift pitchfork has been and still is the showrunner for this market since April. Above this dark blue middle time is the declining mauve medium moving average, currently 540.40. Meanwhile, below, the market was once again supported by the 38.2% Fibonacci line of the July 19 to December 24 move at 532.15. And below this we have some space. Though the mid-November closes between 529.07 and 529.78 might be problematic. But we otherwise have some space until congestion between 527 even down to 524.07, though this is not necessarily that strong a congestion. US dollar against the Mexican peso. A lower, well, at least the tail was lower, if not the open and close, a lower indecisive doji cross yesterday after the previous session's key reversal. And the previous session was a key reversal down. The market continues to try lower out of the dark blue late September to early November shallow bull channel. This had a primary target on this move lower in the 1832.82 zone, which has already been achieved, but there is still a secondary harder to reach target X down in the 1809.60 zone. Now in between we have the lesser Fibonacci line at 1817.60, which ties in with the September low, but then really nothing until the combined August 2017 to July 2024 lows at 1759.58. So far today, a small, very small attempt higher. Not doing very much at all at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.